Good afternoon and welcome to the New York Daily Wrap-Up here, sponsored by ForexAnalytix. And we've seen the dollar start to pick itself up. I'll tell you what, I thought we would start to see some definitive action once we got past CPI, and actually not a whole lot happened. So tell you what, I was thrown off kilter today. Especially here with the euro, one thing I've been adamant about for my own self is I do not want to short the euro. I did take a couple of scalp shorts early yesterday morning, but I felt that despite this having some options, I thought that there was a potential that we could pop up. And we did make one more extra pop, but I thought we might be able to pop up close to around 60, although our bias chart resistance, and we'll take a look at that here on the daily, was here at 1372, which is confluencing with 1377 to 38% of 1108 to 1815, and the 78%, which is 1378 from 1108 to 1448. I didn't think we had this our bias chart resistance, and I thought there was a potential we could get there, but as we were coming in, past CPI, I thought, there's still the potential we can actually at scalp long ahead of that, thinking that data was going to be not so great. I thought even worst case scenario would still probably pop up a little bit, and we did. But other than that, to my own detriment, I've played it very, very cautious because of my thoughts were we can still pop up here and gun the stops and then turn around and start to slide back. Well, we did move higher, but not significantly higher. We basically just challenged this 1343, and I thought we might just be able to pop the stops on that and push it up here into the 60s. And that simply was not the case. And another thing is here with the cash dollar index, we covered this in the European crossover webinar. We finally made it to that 96.63. That's a limit that I thought, or level, I thought that was going to get there on Monday, and it didn't. And on Tuesday, it came up just about a tick shy, and then finally we got to it, and I'm thinking, once we get to that, we're going to zoom off and take off to Venus. Well, if you look at this on a 2-hour chart, it does look like we've zoomed off, but not really. I mean, when you looked at it, it kind of dither-dattered right there and really didn't do anything for a while. Finally got to be chugging, and then it started to slide back again. It's just been a mixed bag. And here with the way that the action has played out here with the dollar index, to a certain extent with the euro, as I mentioned, I think that the dollar is very susceptible. And one of the things that we actually pointed out here yesterday also is, and why I've been a bit cautious, maybe even a little bit too cautious, but sometimes that happens. Sometimes you have those days where, as I was mentioning in the room, sometimes you get missed opportunities, and the missed opportunities feel just like as if they're losses. Fortunately, they weren't, but I'm just saying it almost feels like that. And I'll tell you what, some of the guys in the room did very well today, even though they were very, very tight ranges, but did very well. Like I said, I just really was very hesitant. I did not want to take the short side of the euro, although when you look at it on the charts, it does look like, especially the 2-hour chart, looked like it was susceptible then for a slide back. And I guess if you think about it with the options in place, that probably did keep a lid. My thought was if it starts to take off, I would just have to just bail. And I thought, man, why do I want to take a needless loss? And then turn around and see the thing come back in. But those things happen. Sometimes you think you're in sync with the market, and sometimes you're not in sync as you thought. And why sometimes it's best just to play the levels, and that's it. But that being said, one of the things that we looked for was our resistance, which was 96.91. And we hit that early on Monday as we came into the European crossover. We were already pushing in there. I'm thinking, well, God, how much further can this move then? We've already hit this. We actually had that as our analysis from the weekend, from the Asian analysis. So we came up in here, and I thought, okay, there's a good chance we can make it up to 97.11. And we simply did. And one of the things we're addressing this morning was simply that concern, and we talked about that yesterday here on the wrap-up, is that we're just not getting that bounce. We've hit a key level, the 96.51, which we had on Friday as our bias chart support. The 96.63 was the 38%. So I thought we would have seen a very good reaction. Yes, there's been some pretty good liquidation here in the dollar, but I thought we'd see a decent little bounce back. And at the time, we were talking about, I look at here on the 2-hour chart, looking for, here's the 97.11, which we have again for today's bias chart, I believe it is, and resistance. and potentially 21. I'm thinking, and he moves back up here, and I was hoping, my thought was, I hope we could just get a real mad dash up in here, trip some stops just above here, and then we can start to ease back, and then maybe the market hangs around or whatever. Well, that scenario did not play out. Now, certainly it has bounced back, but me as a scalper, short-term trader, I thought, like I said, I try and get these senses of where I think things are going to play out. As I mentioned, sometimes if you can get in the flow, you see the flow of the way things are playing out. But the dollar's been very, very, tough trying to find a bottom. It finally found a little bit of bottom, and then if you look here, it acted like it didn't want to go anywhere. And then we've reasserted ourselves. We shall see what happens. I think the jury is still out as far as whether this dollar is just going to go on and turn around and roll right down as we close out the week. Certainly, this is not the kind of bounce you would have expected, especially as bullish as the dollar's been. So it looks like when you think about it on a little bit medium-term basis here with the dollar, it looks like peeps are grabbing their shorts and they're hanging on to the shorts, and I'm not going to let go of them. And like I said, we did break this trend line. Now I run my trend lines across the body. Other people do those, on the the wicks. I don't. I mean, obviously, if there's a super long wick, you have to take that into consideration. But there's no. I try and go where the most volume is at. So anyway, rolling back in here, I would have expected we would have seen a much nicer bounce. At least, see, there's 97.12. At least that would have got us. And look, maybe we could have pushed up to 97.31. I would have thought that would have been a fantastic place. We're not even being able to even get. We can't even hit 97. So that's my concern, and why I was very hesitant, even though we did see it. If you look here in the euro, I use a 2-hour chart. Look at this. Boy, that looked really juicy right there. You look at that. I guess I probably should have just put it on, but I thought, I'm not going to be just giving up gains, because I thought we could jump up there and spike up and take out some stops. But this is pretty juicy against this level here. Sit back, revisiting that 1343. And the market did sit there for a while. So it's not like as if it ran up there and just immediately dipped off. It sat there. I mean, these aren't 10-minute or 15-minute charts. These are 2-hour charts. And the market was still sitting above there, really opening the door if it wanted to take off. Finally, we took a dip. Then we ran right back up as if we stopped you out. Now we're going to come back up. And then we started to slide right back down. It's been a really weird kind of day in a sense, at least for me. Like I said, I've really been hesitant to my detriment to really push the pedal on any side. I really don't want to be short the euro. I'm thinking that don't want to get caught on the wrong side to a pretty good move, and then maybe turn around and give that right back just as quickly. One of the things that we talked about the last couple of days, I surely would like this euro to come back down to right around the 1272, where we could think that'd be a great area. Well, the low on Monday, I was saying, is like 1293, 1291 or so. We're kind of challenging that. I think that we can probably push a little bit lower as we go into the rest of the day and maybe into Asia, because anybody that came in late long and said, you know what, I give up. This euro is simply not going to pull back. I'm getting long here. Well, my thinking is those people are going to add to, as we move lower, they're putting their stops here and go, well, I'll just put my stops under the low because I can always get long again. And so I think we can drip back, a little bit lower. This is a very good area. This 1272, but 1280 right in here, and we get a quick little bounce off of that, but we may have to work a little bit lower. I think the dollar can push a little bit higher, but it certainly isn't reacting as the way I would have expected. Here's the Canadian dollar. We are starting to work a little bit higher here on the dollar CAD. We did get a poor outlook for crude, and that has weighed on the Canadian dollar. Now, we do know that the two past two employment reports have been really very, very nice, just gangbusters here. We actually have a nice little resistance here at 30 to 33, 35. Now, we actually had, when I looked at it on the 2-hour chart, here in the dollar CAD, we're looking for a bounce area here. We're looking right in here, which takes us right there at 33.29. Okay, right there, 33.29. We're almost there. We can go on and take also a quick look at a fib. For those, once again, like I said, we talked about this, the poor close and on the prior Monday, and that would open the door for us to go lower, and we certainly did, and it went lower with vengeance. Potentially, here's that 38% all the way back, which would retest the trend line. They're pretty oversold. Dollar might get a little bit of a boost. Maybe we can press up higher. Once again, our bias chart resistance today is 33.29. That's not a bad area. I didn't think we could make it up here. This is where I originally wanted to be, was right there, 33.43. But I thought, man, that's a pretty good little stretch considering how weak the dollar CAD. Well, we're pushing a little bit higher. So anybody that may have added on their shorts in here, same thing we talked about, late euro longs, they may want to try and push them, but really there's a lot of good volume in here, starting at 29 and going right on up to 48. So really anywhere in there, if you're looking to start, but like I said, because of the weakness in crude oil, it may allow for the dollar CAD to work a little bit higher. We talked about also the cable. We mentioned this has been the bias chart resistance for the last 2 days. Mentioned that it's been consolidating below this, trying to bump up. And if it did, the door would be open for a move to 28.25. When you look at it on the daily chart, with a pause at 28 even. Well, we've started to slide right back down the pole, so it's kind of going back to what it had before. Let's go and move into the cross rates quickly. One of the things that we did go in and cover here on the Euro Aussie, you can see we saw this on it had actually already formed at the time when we did the European crossover webinar. But you can see this is a beautiful textbook gravestone doji. Beautiful. We've already had a pretty good move here in the Euro Aussie. Let's go and take a look at it here on the daily chart. Now, when we did our bias chart analysis at the beginning of the week, we were talking about how it had defended the 60.95 area and that the door was open for 62.62, which we got there. And talking to some gentlemen yesterday, someone was asking about it, and I think the gentleman was new to FX, if I remember correctly. I don't remember who it was. They were looking about trying to short this. I said, hey, look, because it had come up to resistance. The resistance that we had, the bias chart resistance from yesterday, we had it, I think it was like 83. And at the time when we did the European crossover, it had just hit 87. So we did see the market pull back. But I said, hey, look, you still have to look at how this thing closes. If it closes above the 62, the door is still open for higher prices. This was our resistance area right in here. And you can see certainly that's what we did yesterday. We closed above 62, which opens the door for this to move higher. I think at the time when I was discussing with the gentleman, say, hey, look, that's going to go and allow, the bulls on a longer term basis, they're still, basically the profits are still coming in. So they have no reason to turn around for that. So close them up to 62 opens the door and for the next move, which would actually come in here at 63.41. Well, we made a run up in here. Looks like what, 63.26. So pretty close, kind of backing off. We'll have to see how we close today, but we're still holding here. But as I mentioned, when you look at this here, it has room still to move, and the euro, once again, as I mentioned, is rather positive. Can we get a short-term pullback? That's possible if we work a little bit lower. As I mentioned, if we look at it on a 2-hour chart here, and that's what my chart du jour. I don't use the 4 hours, I use a 2-hour chart, but if you look here on the 2-hour chart, very nice textbook gravestone doji. And the market's moved back. But I tell you what, it's not adding on, so if you're trying to look as to where we could, if you're trying to day trade this thing, or you're thinking maybe we're going to get that slide lower, then the key resistance would be right there at that high there, which would be 63.04, not very far away. So if we make a move there, then you could look as, okay, let's see how it reacts against 63.04, and then you definitely don't want to get a close. You're not risking too much. 63.12. You get a 2-hour close above 63.12, then you got to head for the hills on that. Going back here, we talked about this on the Aussie yen, and we covered this. And one of the things we were looking at, let's take a look here on the daily. We were talking about, look at the run, the fabulous run we've had in equities, and this thing wasn't doing anything. And so we said, hey, look, the door is really open for now for this thing to go on and move lower. And what we were looking for, and we initially when we did the analysis, I think it was on Tuesday, I would say, or it might have been Tuesday on the European crossover, I'm not sure, but I said that the door's open for this now to go potentially as low as 74.02. I did do some Asian analysis from last night, potentially open to go with a pause here. This is the first target, which is going to be the 74.73. But, you know, you think about how sickly this market's been acting, and you would have thought with the fabulous run we've had in equities, which quite often they'll trade the Aussie as a proxy for equities, has just been an absolute abysmal showing and really has opened the door. And you can see here why I think that eventually we'll get to 74.02. It looks like we can get there. The next area of support is really the 74.73 here. Okay. Sterling yen also had tried to go on and pick itself up here. The guppy. And it looked like it might try and get some juice going, and we've kind of slid right back down. You can see here where we've had trouble right there, our resistance here, that 38.20 coming in. And as far as resistance, I don't know if I even had that as my buy strike because I think we allowed it to potentially go up higher. We can take a look at that. Yeah, we had 38.45. We were allowing 40 in case we did, because we talked about the cable, you know, consolidating below that trend line, that level here. That thought, hey, this has the opportunity to possibly, if it does bounce up higher, where would that come in? That resistance, and there it is, right there. It would come in right there at 38.45. So we're allowing it to take out some stops above here, but we're weakening again here. So we'll see what happens on that. But certainly doesn't look all that favorable. But to me, my key right here is going to be with the Euro Aussie. Keep a good eye on this one. Nice, as I said, textbook Gravestone Doji here. Let's move back into the main screen before we wrap up. So tonight, and we already know about the Aussie. Look at this. I mean, just terrible. Look at this thing. It's just continuing to fall lower and lower and lower. Actually, we had some resistance. I mean, some support. Our bias chart support, I think, was 69.32 or 30, one of the two. But looking on here, we do have employment tonight. 8:30 East, 8:30 Central my time, 9:30 Eastern. Reuters Post for 17.5. Prior was 28.4. Here's the deal. They've been trying to factor in what the RBA is going to go and do, and essentially they're looking at this unemployment rate. From what I saw, last thing that RBA President the Lowe was stating is that this is basically going to trip right here for potential further rate cuts. And I think because they're expecting this unemployment rate to tick up, I think that's why you're seeing this Aussie under a lot of pressure. So although, you know, the jobs number is going to be important, the key factor that the market's really hanging on to is this unemployment rate right here, this 5.1%. If it gets above there, or actually gets beyond that, it's really going to weigh on the Aussie because it really opens the door for further cuts and actually pricing that into quite a bit of pressure here. Going into tomorrow, we do have, if you wish us on the European crossover webinar, we'll actually have German CPI, which is going to come out tomorrow, and industrial production for the Eurozone. As I said, it's been tricky here with the euro. We're actually still holding here. I think this is a great area to get long if we get that, and that's not that far away, about 23 pips for a longer term move here. Now, like I said, to me, it's disappointing the dollar. We haven't even been able to challenge, and I'm saying challenge as far as to get a butts nose above it, 97. We're just stuck below 97. And if you think about it, if you consider how far we've fallen here with the cash dollar index, it's really a piss poor showing. I mean, look how much we've come off, and we can't even get even a decent little bounce here. And so I thought we were going to get this like on Monday and then kind of come back down. And I thought today, once we got past CPI, we could really start to accelerate one way or the other. We were going to break down, and it certainly looked like we are going to break down. I'd been talking about that 96.63, and we started to lose. I'm thinking like, well, maybe they're going to take it for a slide. And like I said, today was a day for me. I was just absolutely not in sync with the markets. And although we had some good little setups here with the euro, I was adamantly opposed to shorting the same. Didn't want to get my feathers clipped or taken out what I felt might be an unnecessary loss. We're finally starting to slide back. Late in the day, if anything in the low 80s, I think will be a decent area to cover. But I think this is a good area to start accumulating longs. Is going to be this 1272. That's all that we have here on the FX Daily Wrap Up. Thanks for joining us here. And thanks for joining us. And once again, like I said, you may want to go and consider that 10-day trial here with ForexAnalytix. A lot of excellent information as well as analysis, whether it be Elliott wave. You do also have, besides the Elliott wave, I was thinking just went right past my brain, but we, like I said, that as well as harmonics, and of course, basic technical. Blake handles a basic technical. I do it on the weekends, but every day since I'm covering the European crossover webinar now with the daily wrap up. But Blake covers that. But of course, not only that, excellent chat room, very supportive, excellent traders too. Everyone's very encouraging and very supportive in sharing of their ideas, as well as, like I said, real-time data that comes in. We have our data monitor that really quite fast, very fast. So like I said, you may want to consider doing that 10-day trial for $1 with ForexAnalytix. And thanks for joining us here on the FX Daily Wrap Up.